So here you can see that price was previously in a bullish momentum. Let's start analysis from here. Just start from this point here. So you can see on this price action, you can see that price was bearish. Why? Because you can see price took out this inducement, right? And after price takes out this inducement, this validated this point here is a valid lower low, correct? And after this lower low, you can see price created a breakout structure. So before that breakout structure, price created a liquidity grab here, right? So if you see price creating a liquidity grab like this, it means this lower high is transferred from this to this point, right? So you can delete this one here, right, and draw a new one here because it's being transferred to this point. And when price breaks below that point with the full body candle close, then that's our new breakout structure, right? So when this breakout structure is created, this validates this point here as a valid lower low, lower high. This one here, this one is a lower low, right? And if you see price moving like this, you should be looking for sell entries, correct? But as you can see, this point here, which is our extreme order block, failed to push price to break below this point, and that resulted in price creating a change of character, meaning price was now in a bullish momentum, right? So when you see this happening, yeah, it means you're not looking for bullish entries, right? But as you can see, price failed to give us any bullish movement from this point here. From here, price did not give us any bullish movement, right? So it resulted in price opening the market with a gap. It was on a Friday actually, and on Monday price opened with a market gap, and that resulted in a change of character being created again. So this is what we call a ranging market, when price is not taking any direction, but it's constantly giving us change of character, right? So this will be a ranging market. And you can see that right after this change of character, price again created another change of character here, right? So this meant on the H4 time frame, AUDUSD was in a ranging market. Then after that, price eventually started to take the bullish side, because after this change of character created and this lower low confirmed and this higher high confirmed, so it means we're now in a bullish market, right? And after that, what happened? Price took out inducement on this point, right? So when this inducement is taken out, it means we now have a new valid higher high, which is this one, right? And if price breaks above this high, it means we now have a breakout structure, correct? So this means now the price is now bullish because of change of character, breakout structure, right? But in this case, you can see there was no any inducement created, right? So there was no reason for us to buy from this extreme order block because there was no inducement. So this lower high created another change of character, but this change of character was not confirmed until price broke below this point with the full body candle close. So this was just a liquidity grab, then again another liquidity grab here, then finally price created a change of character after it closed with a full body candle close. So our change of character would be here, right? So I'm just doing this so that you can properly understand. But if you look at my chart, I just marked this one as my change of character because now I understand the concept. But if you're still learning, it's wise to do it like this, so you have confirmation, right, that this is a change of character, right? So after this change of character, it meant now we have a new valid higher high at this point, right? So if you look at my previous analysis of H4 time frame, I used the Fibonacci 2 here to identify my point of interest, and the first point of interest was this one, 78% Fibonacci level. So this was the first point I was looking for shorts from, right? And as you can see, price just reacted with a wick here and started selling, but again price came back to this point and closed above this point of interest. But if you can look at price, you can see that the structure points we currently have is for the bearish market. Why? Because price has a change of character at this point. So because of that, we should be looking only for sell entries. So if you look at this point, price is now currently in a discount level, meaning we should be looking for buys. But since we know that price is overly bearish on the H4 time frame direction, it's not wise to be looking for buys here. So with this in mind, we can go on H4 time frame, most recent price action, to look for point of interest for shorts because price is in a bearish market. So if you look here, you can see that price mitigated all the imbalances that we created. This one is fully filled, right? And here we don't have any valid imbalance, right? So here we don't have any point of interest to sell from. So the only point of interest we can look for is selling from the current market price. If price creates something like this, breaks this point here, give us a retest, then start selling, then we can be looking for sell entries, right? So back to the candlestick chart, you can see price finished the week like from Friday, Thursday. The consolidation started on Thursday, right? You can see it's a ranging market. So say that this is accumulation of orders to go bullish or reaccumulation to continue with a bearish side. But I will be taking the bearish side as of now because price is in a bearish market because of this change of character. So now going to the H1 time frame. If you look at the analysis I previously did, you can see price was in a bullish market on H1 after this change of character, then breakout structure, adjustment taken out. So this adjustment was originally here, but it got transferred to this point because price closed this point here with a wick. And after that, we have a breakout structure. And then after this breakout structure, this point here, if price was to continue bullish, it was supposed to hold price. Price was not even supposed to close below this point. But as you can see, price created a liquidity grab here, meaning that the buyers lost control of the market and the sellers are now in control because this was a major structure point which got broken here. But because it was not broken with a full body candle close, it's not yet a change of character. So price could still go bullish. That's why I had this analysis previously. But now that I have a H4 bearish sentiment, as you can see, I identified here that unconfirmed change of character. So buyers failed to take control within the dealing range. So this is our dealing range from this lower high to this high. So since buyers failed to take control within the dealing range to push price higher, since it was in a bullish market because of this breakout structure, it means price could eventually create a change of character if it breaks below this point here when the market opens. So currently we can be looking for scalp entries maybe to this zone here when the market opens, and then we can continue selling from here, right? So what you can do is when the market opens, you can go to lower time frames like the M5, and from the M5 you can start looking for entries. So if you look at the M5 time frame currently, you can see that price is still within the dealing range. So the dealing range on M5 is from this lower high here to this high, right? So if you see, you can see that price did not break below this point here yet, right? So that's why I was looking for bullish entries on M5 as well as on the H1. So on the H1, if price comes and takes out this adjustment on the H1 and price creates a wick like this on this adjustment, we can look for buy entries because it will be a liquidity grab, and usually after a liquidity grab, price will continue with a bullish momentum. So on the M5, if price takes out this wick here, we can continue taking long positions on AUDUSD, and this also happens to be the previous daily low. So it means if the price make a sweep on the previous daily low and create a wick like this, it's more likely to continue bullish. So we can take this setup, but keep in mind that the overall market direction on H4 is bearish. So if we were taking buy entries on the M5, it's only a scalp trade, not like a long-term trade. So yeah, this is it on the AUDUSD. Now I will go to the Euro US dollar. So I'll start again from the H4 time frame. So on H4 time frame on the Euro dollar, you can see that price was in a bullish market. These were very huge shift candles, and it was a very strong bullish market. And then price started to slow down when it reached this area. As you can see, price credit adjustment takes it out, then breakout structure, and then price was quite in a range for some time here until price eventually took out this lower low and created a change of character. So after this change of character, we can now start to look for sell entries. So usually if the pairs against the dollar are selling, they are all selling, and if they are buying, they are all buying. And on H4 on AUDUSD, I've indicated that we have a bearish sentiment. So on H4 on EURUSD, we also have a bearish sentiment because of this change of character that was created. So now I'll make this visible only to the visible only on the H1, right? So on M4, since we have this change of character and our inducement is right here, it's already taken out, by the way. So it means we can see price going down at any point from now because the inducement is already taken out at this point. It should not be visible on H4. So since inducement is taken out, this validated this point here as our new valid lower low, and we have our high at this point. So this is now our dealing range, and it's not wise to sell before price taps into the 50% zone and upwards. But as you can see, price already tapped onto the 50% zone here with a wick. So we can start looking for shorts at any moment here, right? Because price is bearish. But if this fails, then our next point of interest will be this extreme order block here, which is lying around 78% zone. So if this move fails, then we'll be looking for shorts from this point here on the extreme order block. So this is it basically. I think on Friday I already shared with you guys the M5 setup, which is not yet mitigated. It's still valid and I'm still waiting for it. So if market doesn't open the market with a gap and open with normal price action, price is more likely to tap onto this 5 minutes point of interest and start selling, and this will be my take profit. So I'll be waiting until the market opens today, 2 a.m. and I'll take the entry and I'll share the entry with trading flow members if I'm still up. But the setup is still valid and I shared it to everyone. Just keep an eye on it. So this is it on the Euro US dollar. Now the last pair I'll look at is the USD JPY. So on the H4 time frame, we can see prices in a bearish market because of this, right? Let me just clean the charts so you can understand clearly without any distractions. So I'll make this visible only to the H1 and lower time frames. So price is bearish on H4 and you can see price just mitigated this extreme order block and there is no resistance on it. Price is reacting from it with a very strong bearish move, as you can see here. So what this means is the sellers are now in control and price is more likely to continue pushing lower. If you use the line chart, you can see here there's a very perfect liquidity build up here, right? So the market could just take this liquidity out and continue maybe to this point or this point. But since this is the USD JPY pay, well, it would make sense if we see bullish moves because the pairs against the dollar are selling. So this is more likely to buy using the correlation rule. But we just follow price action and you can see price mitigated this extreme order block and we are more likely to see shorts. And now if we go to the 1 hour time frame, again you can see price is in a bearish market. It created a change of character on this point here, followed by this breakout structure, meaning price is also in a very strong bearish market. If we go to the 5 minutes, again it's the same thing. We have a bearish momentum. You can see price created a change of character, then breakout structure, then our dealing range is currently this one. And if price goes to this extreme order block, we can look for shorts. But before price goes to this extreme order block, we can also look for buy entries. If there are any price action traders, you can see this setup is valid for entry. So this would be a liquidity in SMC, but for price action traders, this would be a triangle formation, and this would be head and shoulder formation also. If price comes here, breaks this neckline, retest here, and you can look for buys to this point. So our overall trend is to look for sales from here. So if an SMC trader, you can be looking for sales from here. But if you're a price action trader, then this is a valid setup for breakout and retests on this zone, and then you can look for bullish moves. So yeah, basically this is my outlook on AUD USD, Euro USD, and USD JPY. I'll leave this time. If anyone have any questions, feel free to ask.